over or not, only time will tell. And let's pose that question now to George Thomas from Quantum AMC, who is joining us on the show. George, good morning. Thank you so much for joining in. Sticking to that subject of the broader markets, as Nimesh was highlighting, there has been a 10 to 11% correction in the small and micro cap space. But do you see that as the correction being done with? Do you see that there are now pockets of value that are emerging in the broader markets? What's your sense there now?
Yeah. So what we have been seeing in the last few quarters was there has been reasonable moderation in terms of the input prices and RM cost, and that has kind of given a reasonable support in terms of the earnings growth. But along with that, one other major factor was obviously better flows into those categories and how the trading volumes kind of panned out. So if you look at different segments of the market, the trading volume has increased substantially in the small and mid cap space. So if I were to look at the top 1,000 companies which are listed, so beyond 250 companies which are listed has seen trade 1 year average trading volume in the trading times almost close to 240% of what they saw in Feb 20. So clearly, some of those value was supported by earnings growth, but the trading volume or liquidity has a very high role in what the kind of returns which we saw in the recent periods. So with all those liquidity data coming forth, there is a possibility that flows could moderate in those segments. And hence, we might see kind of muted returns going forward in small and mid cap space.
George, morning. This is Reema here. Particularly wanted to get your view in on defense. It's been the darling of investors, a big wealth generator. But we were chatting with a guest earlier today, Harish Krishnan, and he said that on an aggregate, the defense index or all the stocks are trading at a price to book of 10 times, which is more expensive than even the consumption names. So therefore, it's difficult to make a case for generating value or even over the medium term. Where do you stand on defense?
See, when we look at the order books of those defense companies, we might see that going up multi-fold in the last few quarters. But the point to note here is generally the execution times are fairly long and they are quite working capital intensive. So it's very unlikely that the earnings growth or those order execution will catch up to what the valuation kind of indicates at this point. So it's very reasonable to expect. It's very unlikely that those stocks would make reasonable returns, at least in the medium term.
Right, George, we are heading into earnings season, and we'll start off with IT as companies will come out with their numbers starting the second week of April. What is your expectation there? Are there any key factors that you are watching out for when it comes to these IT companies? The commentary has not been very positive from companies like Accenture. Even some of the Indian companies like Tech Mahindra have not been very bullish on the prospects for FY25. What's your sense there?
See, clearly the market expectations are not very high in those IT names. And if we look at when we speak to companies, it appears like, the next, we have not reached a phase where revenue growth would accelerate in a meaningful manner in the next immediate few quarters. But clearly the deal wins have remained strong. And with the recent correction, some of the large cap names look kind of reasonable from an upside potential, at least relative to where the upside potential is there for the overall broader markets. And it's very unlikely that those tech spends would differ indefinitely for a prolonged period of time. So our sense is at some point in the next year, we could see some acceleration in those order deal wins converting to revenue at some point over the next year. And that should provide some support to the IT names. Of course, when we come down the market cap, the valuations are quite stretched in the mid and small cap kind of IT names, where the ask is slightly higher. But from a large cap IT valuation perspective, there is at least scope for getting better returns compared to markets.
Okay, so IT can provide better returns than the market. George, leave us with some interesting ideas. Any themes that which is not per se, I don't want consensus ideas, like, private sector banks, large cap banks, they're on everyone's buy list, and the case to own them has been well made. Give us some other interesting ideas that you have spotted.
It's very hard to give a sectoral theme other than the names which you mentioned. But some of our recent additions one has been a private life insurance company where they had some trouble with one of their largest channel partner, and our sense is the trouble with the channel. The channel has kind of bottomed out in terms of share, and growth should accelerate from here on. And the other recent addition which we made was a consumer durables company, where the company has a fairly strong brand recall, and margins have, of course, taken a hit because of heightened pricing pressure in that segment. So it's very hard to identify specific sectors, but there are companies which have been going through some bit of transient trouble in the recent past, and investors should kind of take a bottom-up approach in terms of identifying opportunities.
All right, George, we leave it at that. Thank you so much for joining in and sharing your thoughts on the markets in specific sectors as well. That was George Thomas there of Quantum AMC. The Nifty continues to